This is Campus Currency, and welcome to this video segment on the expected family contribution, known as the EFC. In this video, we're going to talk about what the expected family contribution is, how it is determined, and how it impacts your eligibility for financial aid programs. So just briefly, the Higher Education Act of 1965 was signed into law by President Lyndon Johnson, and this set the stage for a new set of laws and federal funding that was designed to assist lower and middle income families in the United States with the ability to access higher education. And that's a very important point when we look at the further information on the FAFSA. One of the outcomes was to create an application that we would measure a family's financial need and their ability to pay for college. And that application is now referred to as the Free Application for Federal Student Aid, otherwise known as the FAFSA. So what does the FAFSA measure to determine a family's level of need? Well, there's several things on the application that it looks at. The most obvious one is a family's income. But it's also looking at your family's taxes paid. It's looking at the household size, so how many people are being supported in the household. It's looking at the number of children that are attending college. It's also looking at non-retirement assets such as cash, savings, checking, the net value of any secondary real estate, whether it's a rental property or just a second home that you own. It's looking at stocks, bonds, mutual funds, 529 plans, etc. But it's also looking at things like the age of the parents, and it is looking at the geographic region of residence of where you live because they're adjusting for a cost of living. It's also looking at certain untaxed income and benefits such as child support, military clergy housing allowance, workers' compensation, disability, any contributions to a tax-deferred retirement plan, etc., and more. So how does the FAFSA measure a family's level of need? So the FAFSA application is a needs-based application that utilizes a complex set of formulas called federal methodology to measure and weigh each component that a family enters on the application. It then assigns an overall score or number referred to as the expected family contribution, or EFC. These formulas are derived from a variety of sources. Some of this could be various economic reports and surveys, the Consumer Price Index, but it's also legislation through congressional policy. So the expected family contribution is the number that's used by all colleges and universities to determine your eligibility for the various financial aid programs. That includes grants, scholarships, loans, and work study. So it works on a sliding scale with an EFC ranging from 0 to 99,999. And generally speaking, the higher your income and the smaller your household size, the greater your EFC is going to be. So families with a lower EFC will qualify for more grant aid, and that's the free money that doesn't need to be repaid. They'll also qualify for more needs-based loans, such as the direct subsidized loan, and also federal work study. So for example, a family with an EFC that's below 5,847 for the 2021-22 academic year will qualify for a federal Pell Grant anywhere between $672 up to $6,495 for the year, depending on their EFC and their enrollment status, whether you're full-time, three-quarter time, half-time, or less than half-time. The EFC is determined by the FAFSA application and the Department of Education's EFC formulas, and not by the individual college or university. So in theory, your EFC should be the same at all colleges that you apply to. So on the other end of our scale of EFC ranges are the families whose EFC actually exceeds the total cost of attendance for a college or university. So these students are determined to have what's called no demonstrated financial need. So let's look at an example here. So let's say the cost of attendance for your college was $8,000 for tuition fees, room and board, books, supplies, transportation, and miscellaneous expenses. So this is probably maybe a 2-year junior college or community college. Now your FAFSA EFC comes out to $20,000. Since that $20,000 is greater than the $8,000, you're considered to have no demonstrated financial need. However, if that same family also applies to, we'll say, a private college, and where the tuition fees, room and board, and overall cost of attendance is $75,000, in theory, that expected family contribution is still $20,000, because remember, this is coming from the FAFSA application and not from the college. And so in this case, since the $20,000 is less than the $75,000, this student would have demonstrated financial need. So what does it mean to have no demonstrated financial need? Essentially, if your EFC exceeds the college's cost of attendance, then you only qualify for non-need-based financial aid. And typically this means only loans such as the direct unsubsidized loan, private alternative education loans, and parents may qualify for the Parent Plus loan to meet costs. There are exceptions to the rule, though. There's merit scholarships, which are awarded to students based on a specific skill, maybe athletic achievement, GPA or test scores, or some other ability. They may or may not have an EFC component tied to that eligibility as well. There's also other institutional aid. So individual colleges and universities sometimes have their own aid programs, whether it be grants, scholarships, loans, or work study. And they may designate those as non-need based, which means you may qualify for them even if your EFC exceeds the cost of attendance. But that's only as long as you are not also receiving need-based financial aid. Then it will offset your need-based aid. And the same goes with private outside scholarships. As long as you're not receiving need-based aid, you can get that full amount of the outside private scholarship. And just some final thoughts to round out the video. Just to remind you, the FAFSA, Free Application for Federal Student Aid, is the application that determines your expected family contribution, or EFC. If you're applying to a private college, there's 241 colleges across the country that also require a CSS profile application through the College Board. This is required in addition to the FAFSA application. This application also determines an expected family contribution, but they use different formulas from the Federal Department of Education. And then finally, the federal government sets EFC limits on their various grant, loan, and work study eligibility. And then your individual state government will set the EFC and possibly income limits on their various grant, loan, and work study eligibility programs. And then your college or university sets the EFC or income limits on their various grant, loan, and work study eligibility. And finally, private outside scholarships may also set an EFC or income limit on eligibility for their scholarships. I hope you found this video helpful. Coming up, we're going to talk about the net price calculator. Please like and subscribe this video, and we'll see you again real soon. Thank you.